Hey everyone, Michael here. Hope you guys are doing awesome. Today I thought we would look at the Bitcoin weekly charts and look at some of these exponential moving averages and some of these simple moving averages because we've had some new things happen that have never happened before. Before I get started, this is my first video since coming back from COVID. Please make sure to give the video a like and please make sure to watch the video as in its entirety so YouTube knows you guys are still watching the content. Thank you guys so much. So let's get started here, guys. Now, this is Bitcoin's exponential moving average chart, weekly chart, if you will. Now, we've had our first official death cross ever with the 20-week moving average crossing below the 200 weekly moving average. This has never, ever happened before. And as you guys know, usually these death crosses on the weekly charts mean some really bad stuff is coming, okay? Death cross right there on the exponential moving average chart. Bad move coming down. Go back in time just a little bit, guys. It's never happened. The green line is never broken down below the yellow line, Never. Even all the way back over here in 2015, never happened. It's never, ever happened. So this is kind of a new territory for us. You know, technically speaking, this is a very bearish indicator, of course. However, you know, Bitcoin can go against the indicators and such. So we still have an opportunity to kind of go up from here. But it is going to be interesting to see what this means for the future. Give it a few more weeks, we could be all the way back down here like $14,000 or so. And it'll be like, oh man, didn't you see that death cross? Wow, that thing really meant a lot. Or we could just be breaking back above the death cross, and we'll talk about that here in a second. So that's something interesting right there. On the other hand, if we go look at the simple moving averages, that death cross has actually not happened yet. And I've been using these ones a little bit better, a little bit more over the past few months, because as you guys can see, the death cross from the 20-week moving average crossing below the 50, that was the big signal to say, hey, you should start shorting. If you guys waited for the exponential moving average, you guys might have actually noticed it came in too late. So if you guys followed this one, it actually was pretty on spot. You had to wait like a week, and then the crash really started here. Going back in time a little bit, we've never had this breakdown below the 200-week moving average as well. Okay, came close, but it's never ever happened. Now, this is how I'm going to be using this information to trade over the next few weeks here. Typically, in a bear market, it doesn't matter if you guys are using simple moving averages like this or exponential moving averages like this. It's going to be the same here. Whenever we get up to this 20-week moving average in a bearish market, this is usually the time where you guys want to start shorting, all right? Short from here, that we haven't had another opportunity yet, but we may have another opportunity over the next few weeks here if we manage to rebound back up to, let's say, $23,500 or so. But you guys can see right here, back in a bearish cycle, if you just short at around these areas, it's going to be low leverage shorts that you hold on for about a couple weeks or so. Low leverage short, winner, chicken dinner, okay? Usually when we get up at this, to these levels, or even above these levels in a bearish market, I'm usually pretty happy to open up some shorts here and just let see what happens and wait. Happen back over here. Not as frequent, of course, because it was a shorter bear market here. But what do you call it? We actually came up across it and we got rejected. That's usually the shorts I'm looking for here. Going back in time a little bit more, 2014 worked nicely there. Here you would have had to wait a little bit longer, which probably wouldn't have made you as much money, but it worked. Come over here, it worked there, and it didn't work here. You actually got it rejected off of the 50-week moving average there. So that's what I'm looking at going forward over the next few weeks here. I'm hoping that we're going to run into this a few more times over the next few months, and each time we're going to be able to get a nice, easy short out of it, if you will. The one interesting thing going forward here is we actually do have this nice level of support all the way back here from 2020, COVID days, if you will. And that support level is right around here, around $17,500, the lows we basically experienced earlier a few months ago, okay? For the next few weeks, probably for the next month, going into the end of September, maybe even the beginning of October, we're going to have an opportunity to be squeezed by a major support level and a few moving averages. You guys can use the 20-week EMA or the 20-week SMA. They're going to be the same here, a little bit of variation. But over the next few weeks, guys, Bitcoin's price is going to have the opportunity to either get rejected back down, then retest these lows, or to try to break back out and get back above this 200 weekly moving average here. Now, this is the exponential moving chart. I don't think we're getting out of this bear market anytime soon, so I would assume we're going to be breaking down to the downside. Even if we do manage to break out here, we're going to get rejected. And the reason for that is usually when we break out above this 200 weekly exponential moving average, that signals buy, buy, buy. You can see right there, buy, buy, buy. You can see right here, buy, buy, buy. As soon as we break above that level, everything is blissful in the universe, okay? Even going back over here, this one was a little bit different, I guess, because Bitcoin was at $230. If you bought once we got back above here, you were in a solid position, okay? But that's not as nice as what we've been looking at over the last few cycles here. Last two bull markets, when we get back above that 200 exponential moving average, we are going full speed ahead here. So anytime, guys, over the next few months, let's just call it months, because let's be honest here, it's going to be a while before the market looks very, very good going forward. What I see, anytime we get above or at the 200 exponential weekly moving average, that's going to be an opportunity for me to short this sucker back down. On the other hand, I'm going to be doing the same thing with the 20 until it fails here. And, I'm going to be using, let's just call it a nice little scale out level, anywhere between, let's just say $19,000 and about $17,500. That's what I'm going to be scaling out of the majority of my shorts here as I hold these for multiple weeks going forward. Okay. Until then, anytime we're actually down at these levels, it's an okay opportunity to buy. It really is. Just make sure you guys are giving yourself at least a 5% stop loss. If you guys are going to do some leverage positions, you want to make sure you're taking it safe here. Okay. Thanks, everybody, and have a great rest of your day.